What's going on, guys? It's Blake here at Trade Tracer. Make sure you go ahead and hit that like and subscribe. Also, get free signals with the link in the description. As you guys know, none of this is financial advice. Always trade and invest at your own risk. Let's go ahead and get started. I got the SPY pulled up here on a daily time frame, and you can see this previous breakout was right around the 338.5 area. That's this level right around here, and you can see I have a Fibonacci retracement pulled up from the previous all-time high back to this pivotal low that we put in on September 24th. Okay, so the reason that I have this fib sequence pulled up is because you can see that we did hit some resistance around that 0.786 level, backed off from there, got saved by the 10 MA and also the 618 fib. Posted up on Twitter that if bulls wanted to make a stand, this would be a great place to go ahead and make a stand. This was Thursday, moved higher off that, came back and tested that 786 fib once again. And then as we went closer into the day, if we go up and pull up a 15-minute chart, you can see that once we hit this 786 fib, looked like we wanted to break out and then just backed off completely and then sold off into the close on Friday. So not the type of close that we want to see. Definitely puts some some risk on the table. As you guys know, we weren't really set up for a massive. Let me remove this fib sequence. As you guys know, if you remember, I said once we hit this uptrend, it's not going to be a phenomenal, massive uptrend like we've seen with all of these. And the reason being is because if we look at the weekly time frame, talking about time frame alignment, you can see that MACD just isn't, where we would like it to be for a nice prolonged uptrend. You can see for the nice prolonged uptrend on the weekly time frame, we like to see a fresh MACD bullish crossover, and you can see this MACD histogram down here. It's getting pretty weak, and if we look at the Qs, we've actually got that MACD bearish crossover on the weekly. So it is to be expected, that this previous uptrend, this past week or two is not the type of uptrend where we just go straight up like we did on the Qs previously this year. So that was definitely something that we were expecting. And so, one of the things that we did was book profits and hold runners versus our stops. Okay, so what does that really mean? So when we go into uptrend, we get in early in the trend, we get in with the indexes first, and then we start looking at stocks. Okay, so when we are in that uptrend, odds favor higher prices. So as long as we stay in that uptrend, the odds are still in our favor for prices to move higher. And so we're only looking for long setups. Now you can see I have some VWAPs or VWAPs that are drawn in here. These are moving averages of volume weighted price over time. Okay, so these are very significant moving averages. If you're anchoring these from specific points in time that cause specific reversals. So you can see that on the 15 and the little closer time frame, you can see the Qs actually broke the 2-day moving average. That's this VWAP right here. Broke the 2-day moving average within the last 30 minutes of the close on Friday and ran into the VWAP that was back from this day's high. Okay, so what am I looking for going into this week? Well, if we want to pull back, this would be the next area of interest, in my opinion, would be this 281.50 level on the Qs. So definitely a pullback is on the table. We saw that selling going into the close on Friday. If we start breaking below Friday's low, I think it is possible that we definitely come back and fill this little gap in here. So here's this gap right there. If we go ahead and completely fill it, we didn't quite completely fill it from the Thursday gap down. So if we start breaking Friday's low, I think this gap would be a level of interest that we would potentially see on the Qs right around that 285, 286 level. So keep a very close eye. This is a pivotal week. We have an election coming. There's a lot of uncertainty going on. Definitely not the time in the market to be over leveraged, over risk long. And you want to be making sure that you're playing it close to the vest. We've had phenomenal uptrends. These are great fat uptrends that pay us. And when we had this last uptrend, it paid as well. We had multiple trades: Tesla, Baba, PCT wide, just Amazon, Apple, just to name a few. And now we're starting to see this little bit of a pullback, and we're going into an election. So what am I doing? I'm playing it very close to the vest. I am not getting over leveraged. I am still, obviously keeping an open mind for anything. I am still bullish long term. I do think this market ultimately does, if you're looking out 6 months from now, I do think this market is higher than where we are right now. However, currently, in the current trading conditions, if you're a trader, I don't think right now is the time to be over trading, over leverage, trying to press your gains from the year. Now is the time to pull back the throttle a little bit. Let's let the dust settle a little bit. We've had a nice uptrend just now, and maybe we wait and see until price decides to move more in one of a prolonged move in one direction, up or down. Don't really care as long as we get some sort of momentum. So right now, odds are still favoring the upside. We are still in uptrend. Okay, so if I pull up the 10, you can see on the daily time frame, we're still in uptrend on the daily time frame, still holding that 10 MA, and as well as the S&P 500 still holding that 10 MA. So until we break this 10 MA, we remain in uptrend. If we break it, then we go into no trend. If that happens, I move 100% to cash, but that really doesn't matter right now because in my trading account, I currently am 100% cash. So that's all that I have for you guys today. I will see you tomorrow morning, and hopefully I'll see you on the webinar here in a couple minutes. Take care.